Hello, guys. Thank you so much for tuning in on my live broadcast where I am sharing insights and updates of what's going on in the US market. My name is Isaac Jonas, and I like to talk about trading and investing. I focus primarily on the US and Canadian stock markets. For those who don't know me, my background is I'm an economist. I studied economics at the University of Zimbabwe, completed my degree in 2010 and also completed two master's degrees, including a Master of Food and Resource Economics and a Master of Arts in Resource Environment and Sustainability at the University of British Columbia here in Canada. I like to talk about the stock market because I have realized that a lot of people who are rich, if you think of Elon Musk, for example, Jeff Bezos, these guys have built their wealth, incredible wealth, in the stock market by investing in companies. Now, so I've been following, and also to a greater extent, I trade and invest in the markets, particularly in the US, and I've been making mistakes and also learning. So I want to consistently share my commentary. So on this channel, I will be regularly commenting. I also do Facebook Lives as well and do coaching, one-on-one coaching, instead specifically sharing some of the strategies that I use. I trade options, cash secured puts, covered calls for income generation, but I also buy and hold stocks for long term. So in the process, I've been making mistakes and learning along the way. Now, this is not supposed to be taken as investment advice. So let's get started. What happened in the US stock markets? Right now, I'm watching on Bloomberg TV. It's saying that S&P 500 is trading at 6,390.65% points. And if I look at year to date, the S&P 500 has been up 8.90%. What this means is that those who have been buying the S&P 500 index, and you can do so by buying exchange traded funds that track the S&P 500. That is the broad market of those companies that come from different sectors. And these indices, what they do is they mimic the S&P 500 index. So these exchange traded funds. So that's how I would get exposure if I want to do that. And I don't like to give advice because I'm not a licensed financial advisor. But when I want exposure, for me, I sometimes buy SPY, or even some go for the funds that are on Vanguard and such as VOO. They replicate the performance of the S&P 500 index. Now, the US equities market, if I look at companies such as Nvidia, Google, Apple, Amazon has been trading now, as I'm recording, above $231 a share. So, which is something that is very remarkable, given that in April, when President Trump imposed tariffs, it went as low as almost, like below $185. And the idea is, if I am thinking that this company is going to go up in the long term, I want to be buying shares, specifically if it goes for pullbacks. Right now, I also use cash secured puts if I want to get in. That is, I open a position by selling a cash secured put. I should have the cash and then take a lower strike price and get paid for that. And for that, I even lower my cost basis for that particular case. But usually, patience pays. I like to wait for pullbacks. And once the stocks, using my technical indicators, I like to use trading view. And when I look at the demand zones and the supply zones, I can then possibly just get in closer to resistance level, because I've noticed that people have a psychological drift towards certain levels. So that's what I do. Now, in the US, there's been a lot of nuances. There was report that President Trump was going to visit the Fed construction site, which indeed he did. And fortunately, there was a reprieve that the Fed chair was not fired. He's left with 6 months. So Chair Jerome Powell is most likely is going to finish his term. But traditionally, some Fed chairs, even if they are no longer chairs, they usually keep the directorship as one of the board members. So at the end of the day, it's his choice. But what I've seen is that the Fed independence, a lot of people, they agree that according to the Supreme Court, the Fed chair cannot be just fired without cause. So that's important to have the Fed independence. And Fed usually it sets the rate for the short-term interest. For the short term, it affects the interest rate for the short term. But when you look at the longer term, 5, 10, 15 years, investors and stakeholders, they are projecting, they are ascertaining the risk. So the market can kind of like determine that, because let's say if you want to get into a mortgage, if you believe that it's going to be so risky to borrow in the US, so what banks would do, or financial institutions or borrowers, they would take the interest rates higher, to because they don't want to lose money if it goes higher than their expectations. So I think in as much as in this case President Trump, I think he's aware of that. Probably, I'm not in his mind, but I think at the end of the day, the Fed chair has been doing a good job to kind of like, with collectively with the board of governors, make decisions based on economic data that is coming in right now. Because of the tariffs, we have August 1. If these tariffs kick in for some of the countries that have not yet uh, agreed to some deals with the US, there might be a lot of volatility. So what I've been doing is I've been opening positions, hedging my positions on the VIX and through cash secured puts, but also buying some leveraged ETFs for for that track the VIX, the volatility index, because investors usually, what I've seen, if there's a lot of greed in the market, in the equities market, people tend to be greedy. Like right now, people might be buying, that's why you see the equities market, companies such as Amazon, Nvidia, and many others, they've been going up. But for me, I don't think it's the right time to be buying, because you'd get a haircut, because once the market pulls back, a lot of people may panic. And for me, that's when I want to be getting in on high quality companies. That's my strategy. So patience is key. But for the meantime, I'm generating income using covered calls and cash secured puts. I've done videos on my channel on how I do that. And that's something that has been a game changer. I've noticed that as a trader, a retail trader and investor, I want to align my goals to say I want some free cash flows. If I can generate, say, a few thousands of dollars every month from my kind of like paying myself dividends through cash secured puts and covered calls only on fundamentally strong companies that I understand, that's good for me. Whilst I'm still also holding a few other stocks that I believe to have an upside. If that happens, I can still manage to have a capital appreciation, but also have some cash flows, free cash flows for the time being, which is something that is important because I have bills that I have to take care of. I love traveling, and I will be sharing more insights about my travels. I've been this year so far. My family and I, we went to Switzerland. We have other uh, few upcoming trips. And the idea is I want to learn as I travel the world, but I want to have ways that I can generate money to be able to pay for my living expenses, my travel expenses, and anything that I need. So I want to fund my travels by my trading, my investing. So that is very, very key. Now, in terms of the next week, what I like to look at, I like to look at the um, investing.com to look at the economic data. So economic data is very important, but what I've seen is that it is very important to specifically, like if I'm investing, I want to have an economic outlook, a longer term outlook. So next week there's going to be economic data. Fed chair is going to speak at 8:30. That is on Tuesday, July uh, that will be next week. This was this week. Next week on Tuesday, 29th July, there will be the CB Consumer Confidence Index. This is something that is interesting. Jobs, job opening. But the key thing for me, I will see the numbers. GDP quarter on quarter Q2, that is coming out on Wednesday, July 30. This is something that can potentially cause the market to be very volatile. So I will keep an eye on this data. The ADP non-farm payroll is another interesting take, but Bank of Canada, they will make a rate decision. Currently, the rates are at 2.75%, but as a Canadian, I like to keep an eye on that. There's going to be a federal open market statement. That is something to be very, very much aware of. And also, there's going to be a Fed interest rate decision. So we don't know if they are going to increase or leave the interest rates at 4.50%, but there's going to be a press conference. Chair Powell whatever he says, the market will be watching that. So next week there's gonna be exciting insights like this. And then there's the core PCE price index year on year, which has been at 2.7%. So what this means is there are a lot of these data points that can potentially propel the market or cause a pullback. For me, I think the market is really rallied. So I'm very cautious. That's why I am hedging my portfolio with the VIX. But again, nobody can predict the market with confidence, 100% certainty. So I like to balance the probability that I'm right and wrong, so that at the end of the day, if the trades or whatever that I am buying or selling, I mean, my trades, in other words, if I am wrong or right, it's kind of like managed in a way. I don't lose a lot of money, but if I make money, I will still be able to make money. So that's the key thing. A lot of people, they lose money because they come in the stock market, they are very greedy. They do it, right? They speculate. And then when you speculate, you can either make a lot of money, but you can also blow out your account. So for me, I want to compound my money in a very controlled manner. If I can make 20-30% compounded per year, that's fine, right? And over time, I will compound my money, because that's one other secret that a lot of people don't talk about. Compound interest is one of the eighth wonders of the world, according to Einstein. So if you want to learn more about trading and investing, feel free to book a one-on-one coaching on Streetwise Economics, www.streetwiseeconomics. I do one-on-one coaching. But again, I'm not a licensed financial advisor. What I do, I'm transparent about my portfolio, my mistakes, what I've been learning. What I can safely say is, like I was sharing, is that my trading portfolio year to date right now, it has been at, when I last checked the moments ago, 59% up. I started that portfolio with 21,800 Canadian dollars. Now it's over 34,000 Canadian dollars. I remember I deposited 15,000 US dollars and 300 Canadian dollars. So that's the capital. At least that's one of my portfolios that I just share with you guys to just demonstrate some of the methods. And I'm also testing my data. And I will be honest that at the end of the day, sometimes you lose money, but the key thing is to compound, to manage the risk, and to focus on the stocks that you understand. That's what I do. I have a watch list of stocks that I follow, more like a typical Wall Street analyst. So the idea is for me to understand those stocks, know if they are undervalued or overvalued, and generate some income using options and a combination of other strategies of buying and selling shares. That's it. So I hope I will connect with you guys soon. I want to make this a weekly thing where I share my insights. If you have any questions, share your comments. Make sure you trade and invest wisely, and may the markets be on your side. I will see you in the next video, and bye bye for now. For now, Isaac signing out.